5 points? No, no, I wouldn't. I wouldn't characterize that as taking it from that same level. But yeah, I can break down exactly how I found that level and what I was looking at, if you'd like. Um, but before we jump into that, how's everything been going with the system of scoring everything using everything I've showed you? Yeah. Yep. Okay. Gotcha. Um, well, oh, good. Yeah. Well, just keep doing that because the more and more you do that, the more it'll translate into your actual trading. Um, so it's good to hear that that's helpful. Um, so I can show you a trade from, what was it, Friday? This was a really nice trade that I took on Friday. The moves this week haven't been very good, honestly. It's been pretty slow and choppy. Even today, it moved a little better than yesterday today, but it wasn't very smooth until, what is that, 10:30, 10:40, when it finally broke out of the mini range. But it's still been relatively choppy. So the past few days haven't been, what I would call like easy trading days. They've been a little more challenging. Um, but that's due to this probably. Usually, when you get a massive move up like this, then usually it starts to chop up and get a little trickier before it either makes the break down again or it turns and makes the break back up. Um, oh, I'm stopped. I stopped sharing it and I reshared it again. Can you see it now? Okay, good. Uh, so I was saying it's probably doing this choppiness because we had this huge move up. This down here was where Nvidia earnings was released, and then it came out really good news, made this massive move up. So usually what happens, you get the big move, some range and chop, and then we're either going to break down hard or break up hard. That's typically what happens. Um, but in between, you get all the mess that's not very fun to trade, and it's much more challenging to trade. Um, so yeah, I can show you a trade that I took over here that was really nice, and I'll show you the distinction between a pullback continuation and a tradable reaction. Um, and then yeah, first I'll show you the levels here for today, and then I'll show you this trade up above, and then I have a few other things that I could show you towards the end. So what I was looking at here is this is a really big leg out, so it's a really big push up. So again, whenever we get these massive moves in the market like this, I always like to draw the Fibonacci lines from the bottom to the top because it shows you good areas where price can pull back to before we get a continuation of price. So this is telling me we could see price come to here, here, or here. But generally, anywhere within this area would be a good pullback area to see it come down and then go long again. Um, and if we break below, 61.8 over here. We break and hold below this level. So price comes down, pulls back to it, and then goes short. This is when the long from this momentum is invalidated. So it's telling me that it doesn't really want to go long anymore. It doesn't mean that you can't get a reaction from the bottom. So say it comes back down to where it took off from. You can still get a reaction back long from here. But the total trend is now not really long anymore if we come below the 61.8. And then if we pull back down and we don't make it to the 38% and we still go long, it's showing me that there's a lot of buyers in the market because it doesn't even come back to the first pullback area. So the higher that it pulls back to, then the more aggressive the buyers are. And then the deeper it pulls back, then the more aggressive the sellers are. But it could still make it to 61.8 and still go long from there. That doesn't invalidate the idea. But if it breaks below and then pulls back into it and continues, the idea is invalidated for this long keeping the momentum. Yeah. 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 So you just have to find good support or support locations to take longs from. So even though it's this is technically a smaller time frame, so these lower highs are happening here on a smaller time frame than this whole long move here. So if I zoom out too, so first we're in a much higher time frame long. So we've been moving long in the market for a really long time. And then if we look back into the past couple weeks, which would bring us back, what is that? Couple weeks. This is 1 week, 2 weeks to here. So we're still long for 2 weeks. So we have an uptrend on the higher time frame for the past 6 weeks. We have an uptrend for the past 2 weeks, but the lower time frame has been making lower highs. So it's conflicting on the lower time frame. So what you have to look for is an area on the higher time frame that can turn the lower time frame traders into longs instead of shorts. Okay. So the higher time frame location would be here, generally, as like a big level. And I'll show you how I refine the levels in a moment. But this area right here is very important because this is where we broke the previous all-time high. So this was the all-time high. It came back up, rejected from the all-time high. Nvidia earnings came out. It pushed it all the way through the all-time high to make new all-time highs. But in order to break this area, we had to have a lot of volume and a lot of buyers. So we can predict that when it comes back into that area, it'll keep pushing it. But this is a really important level because if this gets broken, it might just fail completely and pull back into level and go short. So these lower highs are important to watch because if we keep creating them and it keeps going down lower high here and here and here and the trend line keeps going, then it's super important because maybe it's just a short from now and not a long anymore. But we haven't proven that idea yet because we haven't broken this area. So even though lower time frame is short, that's why I said you have to be cautious today. In the trade prep, the plan for the morning, I said be cautious today because we have the indecision of the time frames. You have the lower time frames telling you short, the higher time frames telling you long. So it's a fight between lower time frame sellers and higher time frame buyers. So my expectation is for it to pull down and then go long eventually and continue the uptrend. But that doesn't mean it's going to happen because that's the expectation. So we have to be ready for both ideas to happen. But typically when all the higher time frames are still showing up, I'm going to be choosing very selective levels to take longs from. Some people can still make money and do make money shorting, but I've got caught too many times shorting and getting my mindset all mixed up in the lower time frame shorting. But then as soon as it hits a big level, the higher time frame buyers step in, and then that's it. It just goes long massively. So I'd rather try and get in that trade than the little short trades. Um, so, oh, are you, did you leave the call? Are you in the call still? What happened? Not sure. Let me disconnect and I'll recall you again here. Calling you here. Is it calling you? Are you using the browser Discord or the desktop like app version? Oh yeah. Um, I can send you the link for it when we're done with the session to download the different version of Discord. Um, and it downloads it as like a little application, so you don't have to go through the website to do it. It might help with the audio issues and all that. I'm calling you again here. Ooh. Oh fudge. All right. Well, do you want to do this? Are you available tomorrow? The same time, 12:30. Um, and we'll just do 40 minutes tomorrow, 45 minutes, and start from where we are here again. Uh, I don't want you to lose a bunch of time resetting the Wi-Fi and all that stuff. That's not fair. So, I can.
Great.
Okay. Can you see my screen?
Yes,
All right. Perfect. How'd you do today? Did you take anything so far?
I did. Um, I was waiting on your. I saw your levels, and I missed the breakout this morning, the long, and I
Okay.
took a trade. I took a short, and when it pulled back, I got out. I got in again, so I made like $1,000, and then I ended up giving some of it back.
Gotcha.
Yeah,
Did you
because it
take
pulled
another
back.
short again, or did you take a long?
I took a short down at the bottom. I think it was like around 76. Um, I was expecting it to go down to 66,
Gotcha.
and I was in the money for about $200, and it pulled back up and hit my stop. So,
Gotcha.
I could have traded a lot better today. I think what's happening is that I'm afraid to stay in the trade. Um, and when it pulls back a little bit, I jump out, and then of course it just turns around and goes in
Yep.
my direction. But
Gotcha.
now I get a worse entry point, and I've
Yep.
already lost
Yep.
some money. So that's what's happening to me.
Gotcha. I gotcha. I
Yeah.
gotcha. Um, I can analyze this for you of how I saw it today, if you want me
Yes.
to,
Oh,
and I'll,
absolutely.
I'll
Yes.
show you what I did. Um, so we had this.
Can you make your screen bigger? It's like only on half of my my screen. I don't know why.
Um,
Let's see if I can move up or down.
can you click in the bottom right hand corner full screen? When you hover over the chart I'm showing, can you hit full screen?
Got
I'm
it.
not sure if that's on your side or my side.
No, I got it. Yep, now I'm full screen. Okay,
Okay, perfect.
okay.
So, just to analyze a few things, higher time frame uptrend still that hasn't changed, and then intermediate or lower time frame, the much lower time frame, has been creating lower highs here,
Yes.
which we talked about yesterday. And we have this trend line, all these lower highs, lower high, lower high, lower high, lower high. News came out down here at 8:30, pushed market above. So for me, my idea is only to take longs because higher time frame is long, intermediate is long. The intraday was going short,
Mhm.
but then the news made it go long.
Right. Hmm.
So what I was looking for here was if I go into the 5 minute chart, we had a really big move up here. And what I did is I drew the Fibonacci line from the bottom to the top. And then I was looking for an entry here at the 38% for a long. So I actually did engage long here with my stop here. And I was looking for 3R up at the all time high area up here.
Okay.
So obviously this trade didn't work out, and
Right.
that's okay. So that was in the plan. But if I'm gonna score this trade, I get one for the higher time frame trend being up, one for intermediate time frame trend being up, two or sorry. So we're at 2 out of 4 now, and then the third one is momentum. We have momentum here, big volume, high volatility. We're breaking levels, so we have momentum. So it's a 3 out of 4, and now I have to find a location. So this is a location to take a trade from. 38% retracement, but it was also a previous level. So the resistance level was something like this. It's not exactly this, but um, all these previous highs that we had broken and we pulled back to. So this was a 4 out of 4 trade. This is a pullback continuation trade. So what you could see happen here a lot of times is it pulls back, it might sit around, and then it continues up afterwards. So this is what I was looking for. It didn't happen today. So that was a 1 hour loss on the trade. Hit my stop loss. That's okay. But I re-engaged the trade down here, right at the low.
Okay.
It was at 71, I believe, right here, 50.71. So if you look at this 1 hour here. This is a demand area, rally, base, rally candle.
Yes.
So this was an area of, uh, it's also a support area as well. So it's support and it's also a demand area. So it's both. I had the level something like this. I actually had 2 levels. So I had one level like this, and then I had another level a little bit higher like this, like that. So I took it at this first area here long,
Hmm.
and I just got out right after the push ended when it came up to this VWAP. Do you know what the VWAP is?
Yes. Hmm.
Okay. So I just took it from there up to there. So I made back my loss and some. But I was only focused on the longs. I wasn't even looking at any of the shorts. Even though it did end up going short here, I didn't take any of that. You could, and you could have and made money, and that's okay. But for me, because of all of the trends and everything, all the direction
Yeah.
was telling me long. So I'm just going to stick to the longs, and that's it. It may have been a different story if price went something like this and dove down and pulled back to here and then went short. This is an entry potentially because this area here is a really major area of support. And if it gets broken, then it's telling us that the sellers are more dominant than the buyers. Um, so I know last time we spoke about the scenarios and the different ideas. Um, so let me go into the trade chat. Okay. Um, So in
Right.
my trade ideas on the Discord this morning on the post that I made, I said you
Yes.
could look for a pullback continuation trade based on recent momentum. You could look for a 38% retracement or look to take the trade at the broken resistance. So
Yes.
what I meant by that is this area, this white box, was the resistance that I had that got broken and
Mm-hmm.
price pulled back into it. 38% retracement and also taking it at the broken resistance, which can act as support. So I took that trade. And then I also said you could also look for tradable reactions at the support areas mentioned.
Yes.
And that was down here. So my scenarios were just drawn out like this: pullback, continuation, or pullback for a tradable reaction.
Okay.
So
So
I just executed on the scenarios.
nice. Nice. Okay. So if I took a trade at 50, what is it, 5084, um, when it bounced off that level, is that a tradable reaction also?
5084, you going long or short?
Long.
So you're saying right here going long?
Yes.
Yeah.
Yes.
So for me, this is a pullback continuation trade because this right here is momentum. This is pushing long, has a lot of momentum.
Mm-hmm.
This short here, where it came down with this big red candle, that could just be a pullback candle. We don't know if this is pulling back and then it's just going to go long again, or if this is momentum in the opposite direction. But for me, for the momentum to be gone and to not have any momentum anymore, we need to break past this 61.8% retracement right here.
Right. Okay.
So once we break below there, the momentum's gone. But that doesn't mean you can't take a tradable reaction. So tradable reaction scores a 2 out of 4. Our higher time frame trend is up and it's at a good location, 2 out of 4.
Okay.
And this one had the lower time frame up, the higher time frame up, momentum and location. So it's fine to take a trade here and to take a loss here. That's okay. I was up on the trade over half R and then I got stopped out. But
Okay.
it's in my plan to hold that and let it go.
Okay.
Um, so yeah, both trades are valid trade ideas. The short you could take as well. So you could have taken this trade here, short as a breakout trade below this low over here. Um, the only thing for the short is it's a little bit more risky because you're trading the momentum on a lower time frame. So the reason that I wanted to get in on this move here and wait for the pullback to be able to get in is all of the traders are going to be looking at the higher time frame and are watching it break major areas, major levels. So they may want to get in on the pullback. So it didn't happen this time, but it could happen in the future, and it does happen. So another example of that is over here. So um, this was last Friday's trade, and it was actually very similar to today's trade. It was basically identical to this trade.
Mm-hmm.
So um, we had broken all-time highs. So higher and higher highs. Trends are all up. Everything's up at the moment. We get this big push up here, um, breaking the all-time high right at, I think it was right at 9:30. Let me zoom in on the 5 minute again. Okay. So let's see, 9:30. So it was already breaking all-time highs pre-market, and then it opened, made fresh all-time highs, and then turned around. So how would we score the trades on this day? So the higher time frame is up, the
Mm-hmm.
intermediate or lower time frame also up. Did we have momentum for the day? We
Yes.
did,
Mm-hmm.
because we're breaking levels, fresh all-time highs, and now we just have to find a good location to take the trade.
Okay.
So right here is a little small basing area, and these were the previous all-time highs. So to break all-time highs, you need volume and lots of buyers. So when price returns to that area, it wouldn't be a bad idea to go long again from there.
Right.
So if you have longs ready to go right here. And then what you could also do is draw from the bottom to the top Fibonacci lines, and they line up. You're between 38% and the 61.8 to take a long. So this is a valid location to go long from. So I actually went long here and ended up losing. And this trade idea didn't work again. So sometimes that just happens. But then I went long again from the bottom.
Right.
And I took it long from here and got out right here at the VWAP.
Nice. Nice.
So then this was almost 3-1 on this trade. So I
Right.
did have a loser, but then you're still up 2 for the day.
Right.
Um,
Nice.
so it's just the scenario creation. And this level is a strong level of support. Look how many lows have been holding here time and time again.
And now
And
you're looking at the 1 hour chart or the 5 minute chart?
this one's the 5 minute chart.
5 minute chart. Okay.
But something to note about this is that I'm willing to take this second trade here on a tradable reaction
Hmm.
because all of the context is so bullish. If the
Right.
context was more neutral, I may look to flip the trade and go short rather than take another long.
Okay.
But the higher time frames up, the intermediates up, everything seems to be making new highs over and over again. So I'm more willing to take another long than look to flip it and go short.
Right.
But if you look at this day and you draw a Fibonacci line from top to bottom, look where it comes to. It comes to just about the 61.8 area. This one touched just above, but it ended up holding and then going down from there. So is it a valid idea to potentially go short, put your stop above here, and go short with it and try and take it down here? It's a valid idea, but I'm not willing to take that because the context is all against the short.
Right.
But you can still see people make money on the shorts. It's just about what's your risk appetite and do you want to go with the context or not? And typically, if you're going to go against the context, it's going to be a much shorter time frame trade. So you're going to need to be on the 1 minute and the 5 minute and really be watching it really closely. Where if you're with the higher time frame, you can usually let it go a little bit more and not watch it as much. So, yep. Let's see. Did you have any more questions? Was that all clear? The analysis of
Yeah.
it. Did it make sense, the distinction between a pullback continuation and a tradable reaction?
Yes. Yes. Yes.
Okay.
What I had done was there was a resistance. Well, I mean a resistance support level. There was a zone, right? From 87 to about 95. So what I
Okay.
had done is I had at the bottom of that zone, I thought that would have been a tradable reaction, but I realize now as you showed me that the tradable reaction is at the top of a zone if we're going long.
Well, it doesn't have to be at the very top of a zone. It has to do more. So let's say this zone goes all the way down here. You could still take a tradable reaction at the bottom of a zone as well.
Okay. Okay.
So it's more about the context of the chart at the time. So
Okay.
with the fib line on here, we had momentum still, even though it pulled back into this level. So it would still be a pullback continuation here.
Okay.
But if this happens at the bottom, like over here, then it's a tradable reaction because we'd broken the momentum. We don't have any momentum anymore.
Okay.
So this zone could look like this. This could be up much higher. So a zone is a zone because it can turn anywhere inside of it. We don't know the exact price it's going to turn from. So I usually, what I do is I'll just get in at the beginning of a zone and put my stop 1 point behind the back of the zone. That's typically how I execute on the trade. So my zone here was actually a little bit lower. It was something like this. So the trade would be like this. And since this zone was so small, it was only like 4 points, I increased it a little bit into the
Mhm.
next zone, and then I was willing to take a trade again at the next area. Um, but it looks something like that. This was a little bit wider. It was around 2.5.
Okay.
So, and then I was willing to get in again if it kept going with another trade just like this.
Right. Okay. So
Yeah.
so Jake, how long have you been trading?
Oh, I think the connection just went funny there. You started speaking really fast.
Oh
Um,
my, can you hear me okay now?
yeah, yeah, I can hear you fine. Yeah, I just lost you for a minute, and then all the words you said just came out super quick. You said, "How long have I been trading?"
Yes.
Um, trading every single day for 2 years. But well, I started learning maybe 4 years ago, 4.5 years ago, and I learned stuff about it, and then didn't touch it for a couple years until I got into it every single day.
Okay.
Um,
Good.
so I want to show you a few more concepts here.
Okay.
Do you know what ATR is?
I do, but my concept of the ATR is like the average true range for the day.
Mm-hmm.
But then when I go on a chart and I try to figure it out, it's giving me like it like uh, when I use the average true range, what I do is I look at the previous day and I say, okay, the ES has moved, 40 points
Yep.
yesterday. So today I can expect it to move, between 35 and 45 points. So that's my
Gotcha.
so that's my general idea of what the ATR is to expect for the next day.
Gotcha. Well,
Yeah.
hopefully this website will make it much easier for you.
Okay.
So I included it on the document, so I can download this again and send it to you again, because I added some more stuff that I'm going to show you.
Okay.
But the website's called mypivots.com, and it looks like this.
Uh-huh.
So when you look up mypivots.com, it's just going to open to this. And if you
Okay.
press daily notes on it, it shows you a bunch of pairs, all different stuff. So it shows you the Forex stuff and then also future stuff. Do you want to pull it up on your computer right now just so you
Sure.
have it?
Yeah. I'll pull it up right now. Yeah. Give me 1 second here. Pull it up. I believe it's um, okay. And daily notes.
Yep, daily notes. And then you should come to this screen with a bunch of different
Right.
pair names. So if you scroll
Yes.
down, you can
Hmm.
find E-mini S&P 500 future March 2024. So this is what we're trading. And if you press it, it gives you a bunch of information.
Okay.
So what you're looking for is ATR. So it says at the top current,
Hmm.
but if you look at the date under it, it's the 28th of February. So current is actually yesterday, and then
Okay.
previous is the day before.
Hmm.
And you go down to ATR and you can see 48.35 points. Previous day was 49.91 points. And then, so that's important information by itself. But more importantly, is you can scroll down and it says trading days, and it gives you all this information over the past however many days. So the important one that I look at is what was the ATR for the past 10 days. So the average range for the past 10 days was 47.25. So that's my expectation for most of the days is going to be around what the 10-day ATR is. 47.25. 10-day is good to look at because um, you don't want to just look at one day because one day could have news on it and it could be a huge number, or maybe it's the day before news and then it's really small. So 10 days good because it averages 2 weeks of information, but also it's not too long where it might not be relevant information anymore. Um, but all these numbers are pretty close. Even the past 4 months, 120 days, it's still around the same number. Um, but you can see that in the past 5 days, the ATR has dropped ever so slightly. Did you find it on your chart on your website? Oh, Bob, Bob. Bob, did I lose you again on the internet? Oh. Yep, I can still hear you. Hmm. Yeah, yeah, everything's working. I'm sending messages in Discord to other people, and it's working. Yeah, yeah. No, it's no problem. Um, what was the last thing you heard me say? Oh, okay. Yep. Uh, I can keep walking you through some stuff in the meantime, anyway, because you don't need to see this part. It's more just the information. Um, so when you scroll down in the website, I'll show you once you get back on. There's a part that shows you the ATR for the past 5 days, 10 days, 20 days, 40 days, 60 days, and it keeps going. Um, So the important one that we like to look at is the ATR for the past 10 days, so, because it's the past 2 weeks of information. Because if you look back too far, it becomes irrelevant because the market conditions can be different back then. So we like to look at 10-day ATR. So if we look at it, it is at 47.25 currently. And then we can even look at the 5-day ATR and see that it's at 42. So it shows us that the ATR has actually been decreasing in the past few days, which is true because we can see on the chart it's been choppy and rangy and it hasn't been moving that much. Um, so I don't use the ATR for uh, like some people do, like Jody at the office when he trades, he looks at the ATR very closely to help him move his stop. I don't do that as much. I look at it more as what's the potential for the day. So what are the extremes of the day I can see as hidden? So if it goes long, what is 50 points long and what's 50 points short from where we are?
Okay. Okay.
So
Okay.
that's how I'm looking at it. And then it can give you a little bit of an idea of where your targets can be or potentially where you can take a trade. Because if price goes 45 points short and arrives at a level of support, potentially you want to take a trade long from there, even though it's gone short there, because that could be the extreme for the day. So it just helps with some decision making like that, but I don't use it like super closely. Some people look at 5 minute ATR, all that. I'm not looking at that. I'm looking more what's the session ATR. And I'm not saying it's wrong to use it on 5 minute ATR, but that's just something that I opt not to do. Um, it gets too confusing for me and messes up my mindset. Um, and then lower on the website as well, um, it has. Wait, do you have it up yet? The website or the Discord? Okay. Oh, okay. What if it's doing updates? It should just automatically do it. Is it showing you the update screen? Oh, and you're sure you have internet? Because sometimes that happens for me if my internet dies. Oh, that's odd. Oh, okay. Gotcha. Gotcha. Let me call you on Discord.
There. You can hear me now.
Yep, yep, yep. Okay. I'll change back to Discord. I'll hang up.
Okay.
All right. You can hear me fine?
Yes.
Okay, perfect. You can see my chart as well.
I can see your chart, and
Okay,
now I'm gonna go ahead and go
perfect.
and to favorites.com. Oh, you can continue. I'll do it while I'm watching you.
Okay. So this was the top where it showed you the 48.35. This was yesterday's ATR. And
Hmm.
then when you scroll down, you can skip over this information, the next columns. And then you have high low range statistics. This is how many trading days the information is for. And then what
Okay.
you're looking for is the average range.
Okay.
So over here, this is the past 10 trading days, and this is the average range of the past 10 trading days.
Okay.
I know it's like a lot of information on here, but once you get used to searching it and finding it, it's simple. And it's good to get like a bigger overview too. So past 120 days, we can see it's at around 50 points.
Hmm.
Um, but it's been maintaining around the same thing pretty consistently over the past 4 months. And then lower, this information is also important. Have you heard of NR4 or NR7?
No.
So it stands for narrow range,
Okay.
and the number is how many days you've had a narrow range. So what a narrow range is your ATR is decreasing day after day after day. So on narrow range 4, that means that you're on the fourth day where the ATR is smaller than the previous 4 days.
Okay.
And then NR7 is for 7 days. So that means each and every day the range is getting tighter and tighter and tighter. Um, so what I like to do is come down here and look if it's true or false. So if it is true on NR4, NR5, or NR7, it's important information because the more days that it's been having a smaller range, the bigger likelihood you're going to have a trending day. So it can help you predict when you're going to get a really big move or a big trending day.
Okay. Could you repeat that? So when NR4, NR5, NR7 are true,
Yeah.
that means the ATR is getting smaller and smaller.
Yeah. So
And
usually what happens in the patterns of the market is you go from smaller ranges to bigger ranges in ATR.
mhm,
So when it's contracting, contracting, contracting and getting tight, 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 usually something happens where the range expands and gets really big.
okay.
Um, and that's a trending day. Uh, so this is just one factor that can help you determine whether or not you're more or less likely to have a trending day.
Okay.
Uh, because
Uh,
if the range is getting bigger every single day, you're not likely to have a big trending move the next day.
okay.
The
Hmm.
most likely time to have a trending day is when the range is getting very tight and small.
Okay.
Does that all make sense?
Yes. Hmm.
All right, sweet.
Question. What about here where it says Fibonacci retracements and extensions? What is that column?
Oh, I don't know what they're taking this information from.
Oh, okay. I just
Let's
saw it.
see.
Okay.
50, 91. They must be taking off highs and lows, like pivot points on the chart.
Okay.
Um,
Okay.
I'm not sure. What is this? 5123. 51. It's not even on here. Yeah, I don't know. 5119. That's, yeah, I'm not sure what this information is. There might be, let me look. 50, 35 to 119. Yeah, I'm not sure what that's for.
Okay.
Yeah, no clue, no clue.
Okay. No
People
problem.
use the Fibonacci retracements in all different ways. The good
Hmm.
thing about the Fibonacci is that you can use them on multiple time frames, and they work on the lower time frames and the higher time frames. So I used it today based on this move up here. This is 1 hour chart.
Hmm.
Um, I used it based on this, but if you zoom out, you can look at the larger pattern that we had from the low over here to the high up here. And look where it stopped. Price came, touched the 38.2,
Wow.
and then went long from there.
Wow. Nice.
So yeah, it works on all the different time frames. So I don't know how they're using it, but for this website, the information that I am looking at is just, are we narrow range, 4, 5, 7. So
Mm-hmm.
when it's true on the 7, it's the most impactful because it's been getting tighter and tighter for the longest amount of time. So it's a higher likelihood of a bigger move. And obviously, this has to coincide with what the chart looks like. You can't just say, oh, it says true here, it's going to trend. But if you look at the chart and it's getting really small and the range is tight, maybe you want to be more aggressive on taking a breakout trade or jumping on the trade when it looks like it could be a trend. So I'm looking at NR4, NR5, NR7, and then I'm looking here at 10-day ATR of 47.25. And then also I'll look at yesterday's ATR as well.
Mm-hmm.
So it just makes it easier than going on the chart and trying to measure the move
Right.
and
Right.
all that. That gets tricky.
Doing a lot of math.
Oh yeah, yeah. It's not fun. Okay, and then I have a couple statistics that are very important. It's about high and low creation on the day,
Mm-hmm.
and this is for the ES, the NQ, and it's during trading hours, not during the overnight session. So it's from 9:30 at the open until the close. This is the data, where the data has been taken from. So the high or the low is created in the market within the first 30 minutes about 50% of the time.
Mm-hmm.
And then the high or the low is created within the first hour about 70% of the time. So I have it on this document for you here, about 50% in the first 30 minutes and about 70% in the first hour. So this is important information to help us create targets and also to think about where the move's going to go for the rest of the day. So if you look at my chart, this is a 5-minute chart again. Whenever I post screenshots of my chart, I always have this fib line up on the chart for the first hour. So I have at the top, this right at 9:30. This is the high, and then this is the low of the first hour. So the first hour closes here at 10:30 over here, but that's the high of the first hour, and that's the low of the first hour. So it's important how you use the information. So here's the high, here's the low. Now I'm in the trade long from right here, this yellow circle, when the first hour closes. So the first hour closes right here. I'm already in the trade long. So what I'm thinking right now is potentially I could have caught the low for the day and price won't go any lower than right here. So I want to see price break above the high, and that gives me good information that I caught the low for the day and that price can keep going higher. But it didn't end up happening like that. So what it looks like now is that this is the high of the day,
Mm-hmm.
and price won't break above the high with a 70% chance. So it can always break above the high still, but it's just weighing on the probabilities. So 70% of the time, the higher the low will be created within the first hour. So once price breaks below the low of the first hour, then I know the low's taken out now. Maybe this is going to be the high of the day then. So when I take the long here as a tradable reaction, I'm only looking for a small portion of the move because I'm not expecting price to break above the next high, because the probability says that this is the high that has been created for the day and it won't be taken out.
Right.
Um, Again, It doesn't mean that it can't be taken out, but the probability is telling me with 70% of the time that now that's going to be the high of the day.
Okay. So now, so now your trades are more focused around the low of the day.
So the low of the day is also which low do you mean? Do you mean finding the next low, or do you mean the low of the
No,
first hour?
no, the first hour low. I'm saying that now that becomes more important than the high of the day.
Yeah. So the thing about the first hour, high and low, that's really important is they become support and resistance areas themselves.
Mm-hmm.
So the reasoning behind all of this information and the reason behind them becoming support and resistance areas is that most of the volume transacted in the market every single day by the big banks happens in the first hour. So
Okay.
the banks are placing almost all of their orders within the first hour.
Right.
So that makes the high and the low areas of the first hour very important. So when price approaches, when I take the long from here and price approaches back up towards this area here, it's a potential zone where price could go short from,
Right.
just because it's the first hour low. It has another reason as well, and that's because this is a range and it broke out of the range right here.
Mm-hmm.
But more importantly for me is that it's the first hour low. So every single day, I would recommend drawing. You can draw two lines, or you can draw the Fibonacci lines on it, whatever makes you see it better.
Okay.
Um, but it helps with the decision making a little bit about where the day could end up.
Okay.
But
So
so,
so you're drawing the Fibonacci from the close of the 5 minute candle at 9:30. That's or 9:35.
so I'm drawing it from, it's the highest point within the first hour and the lowest point within the first hour,
Okay,
and
okay,
it's the wicks. It doesn't have to do with the closures. It's just the
right.
wicks on both sides.
Okay, within the first hour.
And
Okay.
the reason that I'm doing it with the Fibonacci is there's another concept that goes along with it. So I have the high up here and the low down here. And if you see, I have the Fibonacci lines here for 38, 50, and 61.8. But
Hmm.
that has nothing to do with why this is drawn with the Fibonacci. It's because of the 150%, the 200%, and then the other side has minus 50 and minus 100. So what you can see happen a lot of times is when price breaks above or below the higher low of the first hour, it can end up at one of these levels, the 50% or the one. So let me explain it like this. Let me draw this. So this is the high and the low box. And if I
Hmm.
drag this down, this is the low of the day. And this is a 100% extension of the original high and the low
Yes.
of the first hour. So I'm not sure what the reason is behind this, but oftentimes if you have a level that matches up with the 100% extension of the first hour, it can act as a good area of support or resistance.
Okay.
So let's say that price ends up breaking. So let's say none of this happens. All this stuff doesn't
Hmm.
happen at all. And this first trade that I took works out and it goes long. I would be watching price at this 50% area and also at the 100% area where it could potentially slow down and reverse.
Okay.
And this is just based on the 1 hour high and low. Usually you don't
Very
want to use
interesting.
it. Oh, sorry, go ahead.
I said very interesting.
Yeah, it is. I wouldn't trade off of it necessarily right now, but I would draw it up on your charts every single day and
Okay.
just watch it and see what happens. Um,
Okay.
the only thing about it that might not apply to you as much is that normally it only hits these levels much later in the day. So if you're only trading in the morning session, oftentimes you don't even see it hit like the 100% extension. Today it actually got close to it. It went about 75%. But oftentimes this will happen much later in the day, 2 o'clock, 3 o'clock, things like that.
Mm-hmm.
Um, I know it's a lot of information and a lot of numbers, but I wrote down the percents here. Um, and I can write in a little bit of information here for you on the first hour range. Put a Fibonacci, and I'll write the 50%, 100% extension on both sides for you. And then I can screenshot this as well for you. Um, this is the settings for the Fibonacci,
Mm-hmm.
uh, just to make sure that you have something that looks similar to it.
Okay.
It's nice and
Well,
easy for you. You
yeah,
can
hold it.
just copy this.
I can take a picture of it right
Oh,
now.
okay.
Yeah, I can just take a picture of it. Okay.
And
Uh,
you could do whatever colors you want or anything like that. I just kept it white to keep it simple.
mm-hmm. Okay.
You got it?
I got it. Mm-hmm.
All right, sweet. Um, did that all make sense to you? I know it was a lot.
Oh yeah, yeah, absolutely. Yeah,
Okay.
it makes sense. Yeah.
Uh, so
And I do trade the rest of the day. I just don't trade the morning. It's just that, in the past, if I make something in the morning, or I, don't do well in the morning, then I'm more hesitant to trade in the afternoon. But normally, I'm here until noon. I'll take a little break and have lunch, and I'll try to come back
oh,
about
okay.
4:30 and watch the market till about 3:30.
Oh, okay. Then yeah,
Yeah.
then it's good to watch. It's good to just draw it up and watch it then and see what happens.
Because I've
Um,
noticed that sometimes the market, starts to move in the afternoon, sometimes 2 o'clock, sometimes 3 o'clock, and if I'll leave and I'll come back at 4 and check it, and I'm like, oh my God, I missed a 30-point move that
yeah,
happened at 3:35. You
yeah.
know,
Those are tricky though. The last hour moves can get really tricky. So
yeah,
one thing I would recommend is do not take tradable reactions in the last hour of the day.
okay,
So this trade here, the long from this level down here, if
yeah,
that was in the last hour, I would not be taking it.
okay,
Oftentimes in the last hour, the levels don't hold as well. So we could have just seen price just go straight through it. So tradable reactions are saved for all the time before that. Just skip that trade at the end. Um, but I would, from now on, focus. Like if you review at the end of the day and see what happens on the chart, and you drew out the high and the low of the day, just see if the high or the low within the first hour held for the whole day.
okay,
Um, some days it won't happen. I think yesterday it didn't happen, and that's what's called a neutral day. I can get into this more a little next time,
hmm,
and I'll draw it out for you. The percent chance of having certain types of days. So a neutral day happens about 25% of the time. So the definition of a neutral day is you get the first hour being created. So we have the high of the first hour and the low of the first hour. And what happens is you break out and you create a new low for the day. And then you go and you create a new high for the day. And then normally what happens is price comes back into the middle somewhere. But now you have a new low and a new high.
okay,
This is a bit trickier of a day normally. And it only happens 25, 30% of the time. But I'll just go into it a little bit right here while we're on the topic. This is what normally happens. There's a couple different names for it. You can have variation day, normal variation day, standard variation day. This happens about 65, 70% of the time, anywhere between like 60 and 70% of the time. Um, so, what that is you get the first hour being created, and you have the high and the low of the first hour, and you break out from one side. So we break out here and we create a new low, but the high stays intact. And then price here can end up back in the middle. It can go back up here and then go short without breaking the high, or it can make a new low again and then come back up. But what happens is either your high or your low within the first hour is maintained. So
Mhm.
that would be the high here gets maintained, but the low got taken out.
Yeah, I think I've
And
seen
then,
that. I'm more familiar with that day. I've seen that
yeah,
day happen a lot.
yeah,
Yeah.
the neutral day doesn't happen that much. And then it can happen in the other direction as well. So high created, low created in the first hour. So this is what I was hoping for on my trade, was that we were going to get a normal variation day long.
Hmm.
So price was going to go there, pull back, break the high, and the low would stay intact all day. Pull
Yes,
back, make a new high again. That's
that's
what
what
I
I was
was
expecting for.
expecting and hoping for, but it didn't happen. So then you got
Yeah.
to move on and go to the next thing. So this isn't like the main thing that's on my mind while I'm trading, but it's there to help me make some decisions on certain levels and possibilities. So when I'm in this trade from the bottom down here, I'm not expecting price to go and make a new high over here because we've already taken out the first hour low. So for price to go and break the first hour high would make it a neutral day, which only happens 25% of the time.
Right.
So that's not a very high probability idea that that's going to happen.
Good to know. Right.
Um,
Hmm.
so, and then again, when you come up and you're in the trade and to the left, you have first hour low, that's an important area again. So if you wanted to hold the trade with the possibility of it continuing and going higher, what I would do is when price comes here, I would scale out of the trade. So I'd
Okay.
remove risk from the table, take profits, and then leave a little bit left to keep going. Um,
Mhm.
did that all make sense?
Absolutely. Yeah.
Awesome.
Yeah.
Great.
Yeah. Yeah.
And yeah, I'll send this to you. I'll write a little bit under this first hour range. Just I'll write draw with the Fibonacci, the high and the low of the first hour, and then I'll put in 50 and 100% extensions on either side. And then I'll download this and send it to you
Okay.
after we're done here. And then I'll send you the video as well from last time. I'll edit it and put it together so you have the first little bit from yesterday and then the rest from today.
Okay. Good. Good. Good.
Um, and then I won't be here next week.
Okay.
So are you okay meeting up still on? It would be March 13th.
Sure. Yeah.
So yeah, that's not next Wednesday. It's the week after at 12:30 again.
Sure. Yeah.
Awesome, perfect. Did you have any other questions?
No. No. No, I mean it's really, really good information.
Awesome.
Exceptional information because it like kind of it puts everything into context so that now I like for example, if I would have been in a long, from 85, let's say, I would have, let's see, maybe it'll go all the way up to 5100 or 5105, but that's not in high probability. Um, what's more probable is that it'll go to the middle of the range and basically just sit there or come back. So it's not smart to expect the price to keep going all the way up. And what you're telling me, it's just confirming that that. So it's really
Gotcha.
good.
Good.
Yeah,
Good.
yeah.
Good. Good. Yeah, I know it's a lot, but
That's okay.
if
I,
it's too much information to build into each trading day, just start with one thing and then slowly add to it because it's going to be too much to apply all of everything that I'm showing you. So, most importantly is score the trade and do all of your scenarios every single day. So know where you're going to take all of the trades every single day before the day happens. And then
right.
you can add on first hour high, low, and then expectation of what the day is going to end up like and all those things. But yeah, you'll get there.
Okay.
Yeah.
No, what's really good is that, this video is recorded and I can go back
Yep.
and go over it, and then take more notes.
Yep.
and that really helps me.
Good.
That really helps me. Yeah,
Awesome.
yeah. Thank you so much.
Of course. Alrighty. Good luck trading for the next week and a little bit,
Yeah.
and I'll see you in 2 weeks.
All right. All right.
Alrighty.
Have
Have a
a
good
have a
one.
good trip and a safe trip, and I'll see you when you get back.
Thank you.
All
All
right.
right.
Okay.
Bye.
Thank you, Jake. Okay.
Of
Bye.
course. Bye.